see where my live stream is. Customize to oh, there we go. Awesome. Oh, give me 1 second, guys. Awesome. Oh, give me 1 second, guys. Awesome. Oh, give me 1 second, guys. Awesome. Let's get this. Let's get this. Alright, perfect. We get some music going. Close my door. Alright, perfect. We get some music going. Close my door. Perfect. We get some music going. Close my door. Alright. Who's here? Who's here? Who's here? Who's here? What's up, Dylan? What's up, Dylan? What's up, Dylan? Where's everyone at? Where's everyone at? How we doing? Where's everyone at? Where's everyone at? Oh, I hear echo. You can turn that off. Yo, what's up? What's up, Deep? We have like 40 seconds until the rate decision. The FOMC statement. So ideally, we're gonna trade higher. So we're looking for an entry. So if we come down, I'm gonna be looking for longs. That was lame as shit. What was the decision? So we kept rates the same. That's not really exciting. Yeah, this isn't really an exciting move. Get the music going. Oh shoot, I can't see a lot of the messages for some reason. What's up, L? What's up, Deep? Schloth? Some messages, YouTube thought it was spam. I didn't see it. No, I didn't take anything today. Look, so we're in the middle of a range, so actually turn the music down a little bit. We're in the middle of the range, driven by the news headline. Obviously, we're in all-time high price action. Prices delivering from this 4-hour gap. We have prior day low here. We also had this target that we wanted to see getting taken out, but we came like 10, 20 points off. So there is room to go lower. But if price decides to, I don't know, sweep out another internal low, like here, sweeping these AM lows, and then continuing higher, that would make a lot of sense because I'm watching the options flow, and a lot of big movers are setting up for like next week for us to go up. What's up, Armand? What's up, Trader07? You show me the options flow tool? It's not mine. I just steal the screenshots. I ask people to put in tickers for me. Yeah, it is a program. It's just unusual whales. You know how much it is? I'll check right now. I think it's like $70 a month. I have no need because I have people that have professional licenses. Yeah, I got you. Bro, I've just been so busy. Really been so busy. There's nothing really standing out to me. I'm not gonna lie. We have a low volume node here. Pretty much it. How's everyone else doing? You also took a pretty good trade off this off of this, right? Like there should be no reason for you to be looking for PM trades or after FOMC. You already caught your piece of the pie. Yeah, 2 big trades. You don't need to trade this bullshit. Because we also have earnings today. We have Google, Amazon, Meta, Microsoft. So that's gonna move the market way more than most likely. That's gonna move the market way more than what Jerome Powell is gonna say. It's also his last speech. You need one more flip day tomorrow and you're at 48K? Jeez, bro. You're nuts. I'm actually so fucking proud of you. You're going to Cuba? Are you crazy? Cuba's a dump. They don't even have like electricity or water. You're going to Cuba? What? Are you going to a gated community? Well, good stuff, man. The switch to order flow has been really paying off. Yeah, if you combine the concepts, it's just amazing. The clarity you get. Yeah, Wob has been killing it too, I think. Option flow is like the change. Yeah, especially catching those big moves with just looking at that 0 DTE gamma. Can someone explain options flow, please? I think Armon's a little better than me with the options flow, but basically you're just looking at, you know, for the next couple weeks or couple sessions out, how the volume is changing on the contract, and like how much people are buying and selling these contracts. So what that means is like, I can actually show an example. So Carlos, Armand, did you have access to heat maps? I have access to heat maps every minute for SPY, Qs, and SPX. You get the walls, not the actual program. Where do you get the walls from? I have a friend. He has a Discord bot that sends them out every minute, like on the dot. But what I'm noticing is most of the times the heat maps slide you the info. I don't know. I'll ask. But what I'm noticing is on these heat maps is most of the time it's just noise, so it's just chop. So you really have to look for those abnormal, like very abnormal activities. And that's when you place your trade. Yeah, you don't look at every wall. This is all complicated stuff. I mean, I've made so much money without even considering anything but just raw price action. I'm a firm believer that all you need in the market is proper risk management and just like some narrow framework to look at the market through for it to make sense to you. Like ICT works. If you don't have risk management, nothing's gonna work. Pair it with VWAP deviations and exposure. Yeah, that's a great explanation. Yeah, I'll get back to you. Actually, I'll ask right now. It isn't really needed. Honestly, you can be profitable without it. My one recommendation for those that begin is learn how to read price action. Is it like the dealer map? It's like I'll show you. It's the heat map. Like this. Oh, fuck. Check your DMs on Discord. This. You need that? Alright, I'm gonna send you the invite. It lets me. Here you go. Should be good now. But this is so far suboptimal session. You know, we're in between these London highs and New York AM lows. And I mean, obviously, if you're supply and demand trader, yeah, you can catch your good trades, but we're looking to catch expansion out of here. I'm looking for a decent spot to go long. Like hindsight, sure. Would I like to be in long here? Yeah, but we're 10 minutes before the meeting starts. Like I've watched price move today, you know, hundreds of points. I've been watching since 9:30, but nothing here is screaming A plus. Yes, candles are flying. People are making money. I don't care though. Yeah, every minute. I got you. How many people do we have in here? Let me refresh. 11 people. All right, all right. There we go. I need to record some more videos for the mentorship. Cannot forget that. Why do they use end of day? What do you mean? It's daily net. The GX channel. I mean, you can ask them. I'm just adding this to my toolbox. Like I'm not in a position to give any advice on it. Who should I ask? I mean, they got guys. They got guys on the voice. Hold on, I'll be right back. One sec. All right. Had to get something. T-minus 7 minutes. Let's get Jerome Powell's YouTube going. One of my buddies is streaming.
Yeah, I just closed Jigsaw.
There we go. Now let's see.
I'm having like technical difficulties because my computer's not strong.
This one?
If I were to talk to someone who was
What would you say your average timeline is on an account before you hit a payout? That's kind of a bad question, you know? Like, the firms, they put these restrictions like, oh, you need 5 days to get your payout. The answer is it should take you as long as you need. There's no rush. So, I mean, for me, maybe 2 weeks, 3 weeks, depending on the account. Some of those daily payout accounts, I mean, you can get it past it and get a payout the next day, but you shouldn't be looking to do that because that's just gambling. I mean, like realistically, 1 month, 3 weeks, 2 weeks, that's a good timeline. Like not trading 1 micro, but maybe 3, 4, 5 micros. Very doable. So how many people we got? I don't want to be getting mogged by market mommy. I'm gonna have to turn the volume down on my music and focus on these. Who's this shorty?
Is that what it is? For nothing, no other reason.
Oh god, this guy's a scammer too. Free trading course. Know you wanna party. Buddy, data delayed.
Not that easy to use. Wait. Okay, I fixed it.
Try one. You wanna slide me the link? I'm like, the thing with me is, right, my strategy works, and I've already made multiple six figures trading ICT. But the thing is, it only works in like A++ in certain market conditions. When we're at this all-time high price action, it's a little bit more difficult to trade. So I think it's helpful with order flow or some other tools to have more confluence. Let's see. All right, I think Jerome Powell's coming out sometime soon. What's your limit on trades per day? I mean, some days you're gonna be, no one's perfect, but you know, I've had days where I'm sitting open to close with like 15, 20 trades. Those are bad days, tilt days. I don't have those anymore. But now I try to limit myself to like 2 to 3 max. That's it. Like people would be lying to you if they said they didn't have days where they're just like flip-flopping, tilting. Everyone's human. We all have those days, but it's important to just not go broke on those days. Nate can't journal from now on. I signed a contract. What do you mean?
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Okay.
The U.S. economy has been
13
expanding
trades
at a solid
yesterday is a
pace,
low and
while
insane.
job gains have remained low.
What
the employment
NDA?
rate
For
has
who?
been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook.
What the hell is
We'll
that?
remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months.
Nate's
Job gains have
profitability
remained low.
for a lot of people more
A big part
psychological
of the slowing in the pace
or
of
model-based
job growth over
breakthrough.
the past
It's
year reflects
both.
a decline
It's a
in the growth
combination.
of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened.
You can nail concepts down if you're.
Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose.
Oh my
to foster
gosh,
the
come on.
economic conditions in which
Do
American
something.
families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement
Nothing
last Friday
exciting.
by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas.
We were just talking about his investigation.
I've said
the
that
whole
I will
time.
not leave the board until this investigation is well and truly over, with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
All right, Marcus should be moving now.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy.
A series of
without considering
legal
political factors.
attacks.
And
They're literally not talking
this
about
has
anything
nothing
else
whatever to do with verbal
but
criticism
Trump
by
and the
elected
legal
officials.
attacks.
I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution.
It
and
is.
putting
It
at
really
risk
is a
the thing
fever
that really
dream.
matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates.
If anyone has any
free of
questions,
political
make sure
influence.
you're asking.
It's part of the
I only do
absolute
these lives a
foundation
few
of
times.
this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy.
I'm not on a regular schedule for
That
YouTube
piece
lives.
of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was there?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. And as I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have I think left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade.
The trade's been taking a small to medium pass before they burst or they recharge me. You gotta YOLO them, bro.
Period, beginning with the prospects for tariff pass-through resolving on
Nate, let's trade Asia in the GC. Thing is, it's just too slow. I'm waiting for markets to pick up. This is way too slow, especially like this AM. Like, yes, you can wait for price to trade into like minus 4.5 or minus 4, just overextend and sweep some low. But the reactions are not very sharp.
In other words, there would be no further change, so measured inflation wouldn't reflect that higher level going up more.
Yeah, the earnings, I think,
It's time for that to happen. You know, we really do expect that to
ideally,
happen
right?
in the next 2 quarters. So
I was
we're
talking
watching
about
very
this in the
carefully
group.
to see that
I
what
want
we
to
thought
see
all along
NQ.
would happen. That's the kind of
I want to see
part of the
very
story.
bullish
We need to really
earnings
see that.
and then profit
With
taking
energy, it's so
the
hard to
next
say.
couple weeks,
I
next couple
mentioned,
sessions. And I want to see
sort of the
price
textbook,
coming back
you would
down.
look through an oil shock because they tend to be short-lived and they tend to revert. And monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut. That number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now because, what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, it's a much closer thing on the committee than it was in March, and that makes all the sense in the world, it seems to me.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel.
I'm just listening.
Benchmark.
This is not
Brent
good at
crude.
all.
If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am.
You shorted
I get it,
266.
At a certain point you would move, and
The fuck?
that conceivably could come as soon as the next meeting.
How do you get it to the
Just to
tick?
follow on, the new leadership also seem rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools?
So I'm not going to give him any advice through you today here, but I think communications generally is, I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Hi, Chair. Chair Powell, Neil Owen with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. The last process was with Janet Yellen, with whom I had worked for 6 years, and so it was
Vortex of
we were
drawdown.
sitting down the hall from each other. So it was a very different thing. I think this
Yeah,
will be
you're
a
crazy.
very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Hi, thanks for taking.
You need
my
a trade to
question.
pass?
I
Dude,
would
I
ask a
haven't taken
question
anything all
about your
day.
tenure and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market? And should they be?
I don't know the answer to that. I mean, what we experienced
Is OTE and volume profile?
in
OTE of
the,
what?
in the teens, the mid-teens,
This wick?
was really low levels of unemployment for a long period of time.
I see.
And no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up people who were confined and like training them before they got out, and it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very similarly all over the world. It had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates, and we for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
And just on the other issue, do you need more assurance from the Justice Department before stepping down? Is
Give me
that what
1
you're
second,
waiting
guys.
for, or what else?
I'm
is
waiting,
gonna affect it?
with finality and markets are not confused about our reaction.
All right, we're
We
back.
don't have a problem to solve on that. But the other side of the argument is a good argument too, as I mentioned. It's a perfectly
I'll send you a
good
screenshot. You
argument
get
to be
it.
having,
Let's
good
see.
discussion to be having. So, and it came out the way it came out.
Well, you've got 3 dissents
No,
in favor
I did not
of
see a
the
screenshot.
decided, warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the FOMC, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can. Touche. Walk down the steps. What that looks
Hey,
like.
thoughts about
growth
Warsh
policies
taking
and
over and
how
with
you're
him
able
personally knowing
to
Trump?
have your intervention and not
I mean, with
be
that,
a shadow
Trump wants
chair,
the
but have
market
a kind
to
of an
go up
outsized influence over the process.
That's
and
just something I would never do.
to lower
the shadow
rates.
chair thing. No,
So
I don't know what the exact specifics of
low
it
rates is good for the
but
stock market.
I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know it, and I had
So it's probably a bullish
pretty
thing for the market.
front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for
Yeah, I got
hard it
that.
is to get that group to consensus, and I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think
Why is
that's the way it's
Warsh?
always worked.
Because
the
it's
chair
like,
only has one vote, plus the ability to develop consensus.
what
And
makes you
if people won't
think
be,
what Trump is really
if
about?
they're not
I
flexible
mean,
at
look
all,
at the
then
market. Look
they
how
don't. And so that's why
manipulated
the
it is.
chair
He
has, the
wants,
authority the
Trump
chair has
wants the
ability
market to go up.
is to
And
develop relationships with
start of the
people, work
year
with them, and
or
then
here,
put something forward that has consensus.
this whole move
I
down was
I
just
propose-
so
propose
his
to be a
insiders and
constructive
donors and
participant in
his
that
family could get
process,
rich, bro. They made
really out of respect
hundreds of
for the
millions,
office
if
of the
not
chair.
billions,
And,
off this move.
In your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation?
I think we should start delivering
That
higher.
it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleeding.
Yeah,
of
Barron is
core.
banking.
And here we are with 3 dissents now. What do you see as the prospect of
Like,
lower
Armand, you had
inflation?
a nice short
Those
here,
prospects are real. Remember, though,
but like, it doesn't make sense to me
and
why
really,
you would
the real thing
short
is we're gonna have to wait.
when,
We're gonna need to see.
I
And
mean,
the
we
good
have
news is from a
earnings
policy
after
stance,
hours,
just
and it's
puts us in a
most
very
likely
good
going to
place
go
for us
up,
to
and
wait and see.
the bias
We're
has
right
been to
kind
the
of
upside the whole
high
time.
end of neutral or perhaps
You got
slightly
your,
more
whatever,
restrictive.
100 points, but still,
The labor market
this is a
shows
scary,
more and
scary
more
short.
signs of
It's just
stability, whereas
playing the
inflation is
range.
kind of misbehaving, and so maybe a little bit
Once the
of
market picks a move,
restriction
picks
or
the
the high end of
direction,
neutral is just the right place to be. So
this
we can
is
wait
no longer
and see,
valid.
and see how things work out before we act. And we'll see how much that, how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so
I'm
unknown.
probably gonna call it
How
in the
long
next
will
minute or
Strait be
two.
closed? You can develop any number of scenarios that you want, but we really won't know till we know. So fortunately, we're in a good place to
It
wait-
works
wait
because
and
it's
see.
like, remember, the market's returning back to a equilibrium.
Thanks, Mr. Chairman.
Look
you
at
started
the
post-meeting press conferences for every meeting.
high and the low of the day
Ones with just, with
and
SOPs. Can you
midpoint
talk
mark.
about why
This
you
is,
see
I
that
guess,
as a
where
positive?
traders found fair value.
So
If
we,
you align that
we
with
always said
a
when we were
volume
reporting
point
on
of
press
control, they're
conferences, we always said
probably
if we
like,
moved
yeah,
on
they're
any
like
meeting,
very
we only
close
ever
together.
moved
So
forward
anything
with
above,
SOP meetings where we had the
it's
press
likely to
conferences.
revert back
So
to the
if you
mean.
think about it,
Anything below it, it's
you know,
likely to
during the
revert back to
pandemic, we were
the
moving
mean as
quite
well.
a
So
lot at every
it's
meeting,
just a
sometimes
mean
before
reversion type of
meetings,
trade.
and doing that
But
without
this
press
only
conferences, I
works
think, would be
when
quite challenging. It's become
the
industry
like
norm.
on
It's the standard.
this kind of
I don't know
example,
whether that has to
this
remain
trade
that way.
only
I don't know.
works
I mean,
so
it's
many
just something that people have
times
become used to, and I do think
because
it's quite
like
helpful
10 minutes later,
to
now we're breaking
and
out to the high.
I try to
And this is
deliver
probably
the
the
message
start
on
of the
behalf of
actual
committee
move
rather than
move
18
higher.
people, 18 other people going out and delivering their message, and it's, you know, it's going to be all over the place because we do thankfully have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year? What changes were considered, what you wanted, and what prevented action, any action on those changes?
So yeah, I'm not going to go into the real small specifics, but what we found very quickly was that making changes, making really large changes, for example, to the dot plot or the SEP, it didn't have, we couldn't come up with anything that had really broad support on the committee, and so we just moved on. We didn't really do as much
Thoughts on GX levels?
as we might have.
GX.
And you know, I was never the world's biggest fan of
Complicated
dot plot.
subject, but
You can't
it could be
make
good
something
added
nothing.
confluence.
You know, we've looked at a bunch of things, and you know, it's something. Like I said, I think every new
Armand
chair
says they're
will look
goated.
at our suite of communication.
I'm just adding them to my arsenal.
and think about what would be changes.
I'm not
We
dropping any.
only made
I'm not
changes
dropping the
that
strategy
were
that's
public
brought me
broadcast. And that's because we have a 19
all my
person
payouts.
committee, and you know, you try to do it. You try to do that at the board. That's hard. At the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on this debate?
You know, where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now, so it really is going to depend on how things evolve. And you know, that's really where it is. You know, as I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
All right, I'm gonna call it here, guys.
You just have to find that out empirically.
Nothing exciting.
You know,
in my channel
our,
or in the
fact
group,
that we're,
I'm gonna be.
you know, a big exporter of energy.
I'm definitely gonna be looking at Asia and the after hours movement.
Than it was during the 70s.
But I'm gonna go ahead and move on with my day. Yeah, this is just too boring.
Really substantially less than those of Western Europe or Asia.
FOMC lost all its aura.
From these things. Our effects we're feeling in the current situation currently, and in sort of what's priced in.
All right, take care, guys.
You know, a relatively
Please be
quick
safe.
outcome.
Just because candles are
If
moving,
this goes on for much longer and prices go much higher, then we'll feel that much more.
don't trade
And of
breakouts.
course,
Look at this. Like we're
I'm talking
still,
about aggregate inflation.
we're coming back
I
down
know
into the
we're
range
very
again.
well
Like
aware that
make a high, 30
which
points
might
lower.
be
We're
some
probably
gas
gonna
prices
keep coming
all over
lower
the
and
place
then
now.
just
And that hurts
consolidate
obviously
until the end of the
inflation
day, and then
continue to happen.
news
And other
will have
things are
some
gonna suffer, like
injection.
airline fares I mentioned, and other
We're gonna have a big wick
products
most
and
likely
services
because
that
there's
are dependent on
many companies that,
petroleum and
that
the
report
things about
earnings.
Petroleum, people are going to start to feel that.
Thank you, Chair Powell. Edward Lawrence with
All right,
Fox
take care,
Business.
guys.
So